Energy Media readers, today we're going to be talking about the oil price collapse that started on Friday. And to help us make sense of this rather calamitous event, we've got Ed Hurst, who's an economist with the University of Houston. So welcome back, Ed.
Thank you, Markham.
Now, Ed, please give us an overview of what happened Friday.
Well, Friday was the end of OPEC Plus, as it's been referred to over the last several years, which would be the OPEC nations, a couple of other producers, plus Russia. And, the reality has been that the pronouncements of OPEC Plus were never backed up by any production cuts by the members of OPEC or by Russia. The reason the price stayed as high as it did, especially over the last year, is the decline of production out of Venezuela, essentially the elimination of production out of Libya, and other problems and conflicts. What we had and so Saudi Arabia essentially reached the point where they were tired of carrying the ball for everybody. In January was the warmest month on record for the Northern Hemisphere. That contributed to 800,000 barrels a day less consumption. The trade war across the globe has had a recessionary impact. I don't know if it's going to push us into recession. But for example, the Port of New Orleans had 20% fewer export loadings and 25% fewer import unloadings over 2019. That's a huge amount of activity that's dropped out.
So are we seeing a repeat of 2014 when the Saudis at that time opened up the taps and drove down the price at that time?
Well, essentially the Saudis are trying to buy market share by producing more oil. And that's exactly what they did in 2014.
So what's going to be the effect on the U.S. shale producers? Because the shale producers in 2014 were still backed by Wall Street, had access to capital, could weather the downturn and innovate to drive up their production and drive down their OPEX costs. But that's not the situation today, is it?
Well, after that downturn that kicked off at the end of 2014, more than 250 billion in capital was wiped out. Some of it's been replaced. Some of the shale play companies are much more efficient. But the real challenge here is the capital is just not available. Will there be a big decline? Potentially, and it really depends on how well hedged these companies are. Most of them, I believe, especially the publicly traded ones, had swaps in at $50 a barrel. They should be relatively safe through a 2 or 3 year price war. Many of the other companies that just aren't so hedged are likely going to be going back to bankruptcy court.
So how long is this price war likely to last, Ed?
That's up to the Saudis, Russia, and any other members of OPEC that decide to keep pumping with the Saudis.
Fair enough, but if you were a betting man, what would you bet?
I'd bet at least 2 years.
Wow, that sounds like there's going to be a big impact on oil-producing countries, including Canada. Who are the most likely winners and losers?
The most likely winners would be the OPEC nations who have the low-cost production. And, for the shale play companies going back to them, many of them have hedges at $50, but the hedges don't go beyond 3 years. And so to shake them out, as it were, if that is the ultimate strategy here, this is going to be a 2 year process at least.
Are we looking at prices down in the $20 range, as I've seen a couple of predictions, or might we go even lower?
Well, we could have a brief period down that low. The high cost Saudi oil is $25 a barrel. That's from their big water flood field. But I wouldn't expect it to linger below 40 for too long.
So any final thoughts, Ed?
Well, the real challenge facing the global economy right now is what the impact of the virus is going to be. We already know that the US-led trade war has had a recessionary impact across the globe. We know that reduced fiscal stimulus from the federal government in the US has caused a slowdown. We know there's an impact from fewer loadings, unloadings from China, Long Beach. The question is, how long will this coronavirus impact last? If it goes into the fall, then I think we'll see a significant recession. And quite frankly, it would be really difficult for anyone to raise oil prices in the face of a global recession.
Ed, thank you very much for this. We really appreciate your insights, and we'll look forward to chatting with you again in the near future.
Thank you, Mark.